Is the national debt benefiting the rich at the expense of the average citizen? Shockingly, a significant amount is owed to private investors, hedge funds, and even wealthy individuals. Imagine your tax dollars going not just to public services, but also directly into paying off the interest on the national debt, a debt that could soon exceed the entire GDP. Uncover the hidden beneficiaries of our national borrowing and how it affects you. So who exactly does the U.S. owe all this money to? It's not just one big bank. The national debt is like a giant loan, and the creditors are diverse. A big chunk of it is owed to the public. That means regular people, banks, mutual funds, pension funds, and even foreign countries. Think of it this way. When the government needs money, it sells treasury bonds, notes, and bills. These are like IOUs. People and institutions buy these securities as investments. When you buy a savings bond, you're essentially lending money to the government. Mutual funds and pension funds also invest in government securities. So, a portion of the national debt is indirectly owed to many Americans and their retirement savings. Foreign countries like China and Japan are also major holders of U.S. dollars. Debt. They buy Treasury securities as a safe way to store their wealth. This international borrowing can affect the dollar's value and our trade balance. If foreign investors lose confidence in the U.S. economy, they might sell off their holdings, which could lead to higher interest rates. Another significant portion of the national debt is held by government agencies themselves. This is called intragovernmental holdings. For example, Social Security and Medicare trust funds invest their surplus revenue in Treasury securities. So the government owes money to itself, in a way. This internal debt becomes a concern when these programs face shortfalls, as the government needs to find the money to repay these trust funds. The national debt isn't just a number. It has real-world consequences. High levels of debt can lead to higher interest rates, making it more expensive for businesses and individuals to borrow money. It can also lead to inflation, which erodes the purchasing power of your money. Some people worry about the burden on future generations. If the debt continues to grow, future taxpayers may face higher taxes or cuts in government services to repay it. There's also the risk of a debt crisis if investors lose confidence in the U.S. government's ability to repay its debts. They may demand higher interest rates or stop lending money altogether. This could lead to a financial crisis and economic recession. Managing the national debt is a complex challenge. It requires balancing spending and revenue, controlling deficits, and promoting economic growth. Fiscal policy, like tax reforms and spending cuts, plays a crucial role. The Federal Reserve also influences the debt through monetary policy, like setting interest rates. Understanding who holds the national debt helps us understand the economic and political implications. It's not just about owing money. It's about who we owe it to and how that affects our financial future. This video offers an overview, but many questions remain. For instance, what are the long-term effects of quantitative easing on the national debt? How does the debt ceiling impact government borrowing? And what innovative debt management strategies can be implemented to ensure fiscal sustainability? If you found this video informative, please like, share, and subscribe for more content on economics and finance. Stay tuned for future videos where we delve deeper into these unresolved issues.